Hello, good morning everyone. Welcome to the video. So in this video what I want to discuss is something really very important. Okay, the markets made a huge bounce last Friday after being volatile for 2 days. It was very tight here, Monday, Tuesday, Friday, Monday and Tuesday, whereas Wednesday, Thursday was really very volatile, and and the next day was a huge bounce. So and I predicted this. Predicted is a wrong word, but I had a good anticipation that this could happen, and I was ready to pounce, and I did well. But that would not have been the case a couple of years ago or even months ago, because uh, I would have most of the my swing positions would have triggered on this day, because swing positions would have been trailed aggressively, and I would have failed to see this bounce coming, or at least anticipate. So what happened was that made me look at the data much more, especially the last few shakeout events and bounce events. And what I had found is that whenever there is a market wide level shakeout event, the next couple of days are very likely to bounce. So what is a shakeout? So first of all, in Nifty 50, shakeout would be any candle which it sort of looks like a bullish pin bar. So this would be a bullish pin bar. So bullish pin bar is a candle which is a lower wick, okay, at some support levels or at some key moving averages. And because it is a shakeout, why? Because a lot of swing traders like you or me would be trailing their stops, would be putting their stop losses below the previous candle, saying that okay, if the price goes below that, then I'm out, and a lot of selling would have happened in that way. But by the end of the day, what happens is that the price recovers, and that is what is a shakeout. So what happened is a couple of days ago, July 13, I on my the technical take, I wrote this exact phenomena. I did a small study where I saw that where basically what I said, that shakeouts during the bull market, it could be a high fidelity indicator of the short term market bottom, and that a bounce could come, right? So please go and check out this article. If you haven't, you should. If you still don't know what a shakeout is, you should go and watch, read what is a shakeout and how one can actually trade a shakeout. So basically the correlation was something like this. Every time there is a market wide shakeout, which is characterized by, again, like I said, a bullish pin bar, you will also see that the bullish pin bars, all the shakeout candles in the market, which is basically a breadth level data. I'm not just talking about the CNX 500 index. In the breadth level also, there will be a lot of individual stocks which will show you this pattern, okay. And you can see that on the days of the shakeout, the shakeout scanner also spikes, and this has been the case throughout this bull market. So that was the only thing, and I also wrote in my daily breadth article that on Thursday afternoon, evening, that the bullish pin bars have spiked, and this is the first thing that one needs to look for a market bounce. But just because there is a bullish pin bar doesn't mean that the next day would be positive. The next day, early morning, as the market opens, you have to start looking for a couple of things to confirm that the market bounce is here. Number one is that the net 4% movers has to turn positive, right? And which happened actually. So for example, here is the net 4% mover in a 15-minute resolve time frame. And on September 19th, which is basically Thursday, it went up to minus 26. And then during September, during that Thursday itself, it did recover. And by 3:30, it actually closed around minus 5. Okay, it was still not above zero. So whenever a bounce happens, that means that there will be more bullish buying than bullish bearish selling. So there will be basically more stocks which will go up by 4%. Then there will be stocks which will be going down by minus 4%. So this number has to increase to the positive. So what happened on at around 10:15, we had the positive, the numbers, the 4% movers exceeded the minus 4% movers. So that was the confirmation I was looking for. One could also look at some additional confirmation. So for example, the other confirmation is that the ORBDs will also cross above the ORBOs. Sorry, this is a mistake. The ORBOs, which stands for open range breakouts, will also cross above the open range breakdowns. Now this is another very nice way to look at intraday strength, right? All we are looking the next day is intraday strength, right? I mean, of course, it's visible in the indices as well, but you also have to look at the market-wide data. Now, and that happened as well. So this is this blue line, green line is the ORBO, open range breakout. So as soon as at 9 we had a very minimum ORBOs, and then the number of open range breakouts steadily increased right after the markets did open, and the reverse happened with the ORBDs, which are open range breakdowns. They decreased, went flat for some time, and then eventually the crossback happened here. So the number of ORBOs, the number of stocks who are moving above their range would clearly were more than the number of stocks which were breaking down from their open range. So this is also another very good way to ascertain that the intraday strength is coming back in the market. So there are a couple other things as well one could have looked, like for example, this volume, this is I think other people call it other ways. This is the market breadth volume indicator by Nitin, and you could also see that whenever this volume sort of spikes, that means silent accumulation. Okay, that actually means accumulation. So you can see that in here, this day where everyone panicked. I mean, everyone panicked on this day. I think there was something related to yen trade or something. That was the day where actually accumulation happened, and this was also the day when accumulation happened on Thursday. So this is another thing which I am actually looking at, and I call it Kidia volume because the definition of this, or what this is, I learned from Chirag's webinar, and even here. So whenever this spikes, this means that this is a significant volume. This volume is the volume which actually has moved price, and if the one would also say this is some sort of accumulation. So that was also another thing that had biased me, right? But the major point which I wanted to make in this video today was that bullish pin bar spikes. This is it. If you see something which has a lower wick on the index day, as well as a lot of the whole breadth, the lot of market is showing this, that is showing the bullish pin bars, that basically tells you that the next day could be a market bounce day. Okay, so that was a quick video, guys. Please like and subscribe if you like it, and let me know if you have any questions. I'll see you soon. Bye bye. Cheers.